NVIDIA had the stock market on the edge of its seat before it announced its Q4 earnings. Afterwards, there was a little bit of a muted reaction, at least at the time of recording this video. But that doesn't mean there's things that we shouldn't be talking about. On the conference call, there were numerous things said by the company. We'll go over the different highlights that I saw on the conference call, point those out to you as an investor. When we look at the revenue trend of bolting on about $4 to $5 billion worth of total revenue, that just continues to get stronger and stronger for NVIDIA as that streak continued in the most recent quarter. We'll talk about what that means financially. Inside of the financials, there's probably two different things that I like to look for. Gross margins are one of them. We'll talk about them. Also, a lesser discussed thing is actually the attachment rate of networking. So NVIDIA not only sells the GPU, the Blackwell chip or the H100 chip, they also sell the network configuration around that. And what we are seeing is the attachment rate continues to go lower. That is bullish for a couple of other companies in the networking business. We'll go through the financials. Oh my goodness. Obviously, things are really good. There's some things I want to point out on the balance sheet, not only from a cash perspective, inventory, accounts receivable as well. Very interesting things going on with NVIDIA. And obviously, technically as well, we've got this one basically going sideways for the past 6 months or so. Can NVIDIA finally break out? I'll point out those areas that we're watching from a technical perspective. What is going on, investors? Hopefully, guys are doing well out there. Like we've said, over the past 6 months, shares of NVIDIA have basically gone nowhere, up just 3.8% after the company announced the Q4 earnings. Really didn't do much to change the narrative. Things are still absolutely fantastic financially. We'll obviously get into that here in a moment as it relates to NVIDIA. They reported top-line revenue of $39.3 billion. That was good for 78% growth year over year. Also beat expectations. They also gave a beat on the guidance as well. For the upcoming first quarter for the company, they're expecting revenues at $43 billion. At the time of recording, Wall Street was expecting a number closer to $42 billion, although the high end was closer to 47. This is something that I've pointed out numerous times here on the channel. As we start to look out into later this year, there's still a pretty wide discrepancy between the low and the high end estimates as it relates to revenue with NVIDIA. And the reasons why I focus so much on revenue is we will talk about gross margins here in a second with the company, but they remain very, very strong. In fact, they're likely to tick up as we move into the back half of the year. So profitability, EPS, all this stuff, we could sit here and argue about that or dissect that. But really what it comes down with this company is straight revenue. And so why we follow the revenue estimates so closely is this is the bar being set by Wall Street. In the upcoming quarter, company is going to come over and above the $42 billion, probably gives us confidence for the following quarter at least $46 billion. As you move into the back half of the year, late summer, early fall, winter time here in a season's perspective from the United States, you need to get up into the $50 billion range. In fact, some estimates call for as high as $78 billion. At one time, I've seen this number at $100 billion. That expectation's been tempered down a little bit. So this is the type of discussion, particularly over the next couple of weeks, analysts are going to wonder and think about is where is NVIDIA going to come in as it relates to this? And we've got some clues as it relates to that on the conference call. Right off the bat, they gave a very interesting hint that they've ramped up the current generation of Grace Blackwell. They're obviously shipping a combination of H100s and they're shipping some Blackwell systems. They did $11 billion in revenue in the most recent quarter. Now, I just told you the company had $39 billion worth of total revenue. As it relates to just data center, about $35 billion in the data center. But if you want to drill down even further, just on the compute side, these are the actual GPUs, you had $32 billion. So the fact that the company shipped $11 billion in revenue not only shows you that the Hopper chips are still selling relatively like hotcakes at the current time. In fact, basically $20 billion worth of revenue for Hopper chips. Certainly if you're out there and you're Intel and AMD and others competing in here. The fact that NVIDIA continues to sell the Hopper chip, which is this point is the previous generation as we move into a larger Blackwell ramp, just shows you the strength of this company from a product perspective. So as we move into subsequent quarters, 11 billion will turn into 20, will turn into 30, and by the end of this year, this will basically be almost 100% of those types of revenues. Now, they talked a lot about gross margins, and with a company with 70% gross margins, it's almost like nitpicking how hot a supermodel is or how, tall or good LeBron James is, those types of things. Mid 70s, low 70s gross margins on a company that's doing north of 30 or $40 billion in revenue is practically unheard of, except in the software space. This happens to be kind of a software hybrid model, but we are generating the vast majority of the revenue from a hardware product. To have 70% gross margins in the manufacturing business, particularly for a public company, is obviously absolutely amazing. They say as Blackwell starts to ramp, their gross margins will be in the low 70s as they push suppliers, as they probably airlift and airship stuff instead of relying on, more affordable means of transportation. They're pre-ordering stuff. We'll see that when we get over to the balance sheet over at NVIDIA. They are putting a lot of money into inventory. So they're putting a lot of pressure on the supply chain. When you put pressure on the supply chain, they tend to charge a little bit more. So margins have compressed a little bit. They talked about how once Blackwell fully ramps, they expect gross margins to probably be in the mid 70s later this year. That's something that they said on last quarter's conference call as well. So they essentially reiterated on this most recent call. Now, Jensen Huang was very, very much in hype mode where he's saying the next wave of AI is coming. So we can kind of look at AI in two different phases. You have the ChatGPT kind of chatbot wave, and I still think that's in its early infancy. And I say it a lot on our Fang Stock Recap show on Friday until my mom is calling me or texting me, asking me about how she can use Grok 3 or the new DeepSeek or the Anthropic model. It means nobody is using this stuff. I know we're watching this. We use this stuff all the time. I've got a tab with some AI application up on my browser and even my phone all the time, but we are turbo geeks. The vast majority of people just simply aren't using this stuff. So you got that wave to get through. Jensen Huang's already hyping the next wave, which he says is agentic AI, which is these AI agents where maybe I can tell the AI agent to make a reservation at a restaurant. We actually saw a demonstration of this today from Amazon. They rolled out Alexa, where they basically instructed, hey, make a dinner reservation, text the babysitter, put it on my calendar. That's kind of like agent AI doing multiple tasks for you. That's obviously here, but not in a major way. You've got enterprise and physical AI for robotics. That's going to be a big wave. And you have sovereign AI. Sovereign is basically another word for government AI. And all of that type of ecosystems are going to get built out over the next, I would say probably decade, maybe 2 decades or so. Blackwell Ultra is in the second half. He's already hyping up the next generation of Blackwell chips. So we're not even at full capacity. In fact, it's just 30% of revenues in terms of compute at the current time. They're already talking about Blackwell Ultra, which I don't think is going to be like this big step forward from a compute. It's going to be like going from M1 on MacBooks to M2 or like iPhone 15 to 16. It's not going to be that big jump, but you're going to have Blackwell Ultra in the second half of this year. Again, all things being equal from a supply chain perspective. He was asked about custom ASICs. Now, custom ASIC chips is pretty much what Google is running in a lot of their data centers. These are custom chips designed specifically by and for Google. Broadcom is basically the leader from a revenue perspective at producing these custom ASIC chips. And we saw last time Broadcom did a conference call, they gave like unbelievable guidance and unbelievable type of foreshadowing to the type of demand that they believe is going to come online from the big hyperscalers like Microsoft, Google already existing, but also others as well coming into the custom ASICs. So basically saying that maybe they won't have to rely on NVIDIA as much. Jensen Huang said he would say this: just because a chip is designed doesn't mean it will get deployed. And you've seen this over and over again. There's a lot of chips that get built, but when the time comes, a business decision has to be made. So taking a little bit of shot at Broadcom, taking a little bit of shot at the custom ASIC business, he's basically saying that these things will get designed, they will get worked on, but whether or not they actually get deployed is another thing, because once you go down the custom ASIC route, it's hard to turn around and it's hard to turn back. And so these companies that decide to go down it, I believe the Googles, Microsoft, Amazon, those types of companies, they can afford to do it and they have the scale to do that. But when you start to look further down the stack, it's probably not feasible for the vast majority of companies out there. Talked about China as well, as that is approximately the same amount of revenue, misspelled there, sorry about that, in the Q4 as it was in previous quarter, although it's about half as what it was before the export controls. If you didn't have export controls put in place by the Biden administration, kept in place by the current Trump administration, there's a lot of rumors and predictions that Trump will continue to ratchet those up, actually very similar to the Biden administration. Those weren't in place. God only knows what NVIDIA's revenue would be at this point and what the share price would be. It certainly would not have stalled out over the past 6 months and gone up just 3.8%. Probably would have had an even or larger rise on this one. I'd wager to say you probably have at least another $1 trillion on the valuation if you didn't have those restrictions in place. Company gave insight into the cloud service providers. This is Google, Microsoft, Amazon, those types of companies. They're about half of the company's business, which I actually would have thought maybe it was a little bit more than that. So that's pretty impressive. And just my take broadly about NVIDIA, everybody's asking me, like, how much longer do you think the cloud service providers have to spend on, building out their data centers? I don't think we're looking at years. I think we can start to measure this, I think, in probably decades. Maybe not plural, but I think we probably have a decade. This is like the beginning of when AWS and the cloud just started getting built out. I remember the discussions on Wall Street. People were like, well, how long are you going to have to build out the cloud over at Amazon? Well, you're into your second decade building that out. And I think the same is going to be true for AI, because we're still in the early stages of this stuff being rolled out and used by people. And you still have applications coming out every week. You had DeepSeek and now you have Grok. They come out and they rocket to the top of popularity in app stores and usage. And I think we're just in the early stage of this, just consumers, governments, businesses. And then you get the evolution of different types of software, robotics, all those types of things. We're still in the early days, and the revenue over at NVIDIA continues to show that. On the data center side, I do want to point out that we've been consistently adding $4 billion of revenue to this top side. Now, I actually think the company could actually add more of that if this wasn't a physical product. If this was a software product and it was instantly scalable, they'd probably be adding, exponentially more dollars to this. But because there's physical limitations on how many of these chips can actually be built in a 90-day period of time, looks like they've leveled off at about $4 billion of growth there. That is flowing through the rest of the company. The rest of this stuff, I don't want to say it doesn't matter that much, but gaming, which used to be like the big part of this company, is an afterthought at this point. Quarter over quarter, you had a decline, but you're coming off a rather hot release in the previous quarter, and year over year, you're basically flat. The bright spot is you do have automobile business up about 100% year over year. Obviously, you'd like to see the pace of that continue as well. Gross margins, as the company said, slipped into the low 70% last year. They were closer to 76%. The company, again, reiterated 2 quarters in a row. As you get to the back half of this year, they're front loading inventory, front running, and trying to get as much of this stuff out in the marketplace as possible to capture that demand. They're obviously having to pay up for that. It's impacting margins back half of the year. They should get a lot better. I pointed out at the beginning of the video the fact that networking slipped to $3 billion of the total data center spend inside of this data center spending of $30 $5.6 billion. It's split into two buckets. You have compute, which is the actual GPUs, the Blackwells, the Hoppers. That was $32.5 billion. Networking was $3 billion. I will show you the previous quarter on $27 billion. It was just $3.1 billion. And in Q4 of last year, it was actually $3.3 billion and $15 billion of compute spending. So compute has doubled, but the networking and the attachment of that networking component of the company's business has actually gone nowhere, and it's actually gone in reverse. This is bullish for networking companies out there. Top of mind is Broadcom, but there's several others, which we've pointed out numerous times on the Equity Empire channel. We'll go through the financials, but I mean, this is about as good as it gets. $39.3 billion worth of revenue, still massive gross profit. You're barely having any operating expenses, just $3.7 billion on R&D. It is a big ramp over the previous year from a quarterly basis. Selling, general, administrative, I don't know what those people do. I would love to have a sales job at NVIDIA. That's got to be like the easiest phone call to make is, hey, you want some Blackwell chips, Amazon? How many will you take? And they put like an infinity sign in the email. So yeah, these things sell themselves. Total operating expenses is $4.7 billion. So you take $28 billion, you minus off 4.7, you get $24 billion worth of operating income. Comes down to a net income number of $22 billion. I'm kind of glossing over these, but we have to remember, this is unbelievable. Okay. $12 billion of net income last year. And that was great. Now you're at 22. Look at the full year. You went from 29. This is this is not revenue. This is net income, profit after the government gets paid everybody. 29 billion last year, $72 billion. It's unbelievable. Now, some interesting stuff as it relates to the balance sheet. A plethora of cash. You go through another year of hot sales over this company. How much cash? They're going to have like a Google amount of cash. $25 billion in cash last year. $43 billion. Look at the accounts receivable. People are just lining up to give the company money. $10 billion of accounts receivable. $23 billion. My goodness, people are booking that revenue over at NVIDIA. Inventory, big step up too. $5.3 billion, $10 billion. All of this supports the upcoming quarters from a revenue perspective. Obviously, okay, we know this product sells, and every cloud service provider reiterated that 3 weeks ago that they were going to spend a boatload on AI and data centers this year. So the balance sheet basically supports that, with accounts receivable skyrocketing and inventory skyrocketing as well. Company's got a little bit of debt, but I mean, they could wipe that off if they felt like it. Cash flows, as you can imagine, are absolutely sensational. $16 billion worth of operating cash flow in the most recent quarter. For the full year, $64 billion of operating cash flow. And it's only going to get better, guys. You look at the revenue forecast, even if they come in towards the midpoint, let alone like closer to the high end, $50-60 billion worth of revenue, it's only going to get better for this company. So what are they spending their money on? Not a whole lot. They don't have to spend a lot on property, plant, and equipment. In fact, for the full year, just $3.2 billion. So they're buying back the stock. $33 billion over the past year, $7.8 billion. So that will help the shares, least as they go sideways. NVIDIA is the incremental buyer of these shares. And so if the company can, again, it's all about the upcoming quarters, really the back half of this year, if it can come in towards the high end expectations, which is well north of 50 billion, maybe even as high as 60-70 billion dollars in revenue. Can TSM make that? I think that's the question. Can TSM even make that many chips? I am doubting that a little bit, but obviously both companies are working hard to deliver. Now, company from a technical perspective is actually looking okay. You have the 200-day moving average here in this blue line. And, look here, we're about to sit on the 200-day moving average. Anytime NVIDIA over the past decade or so has approached the 200-day, yeah, we've slipped down below it every once in a while. but anytime you've popped on the 200-day, it's been a buying opportunity. What you're looking for with NVIDIA is a break above the highs up here at about 150. You need a break above the highs. Should get some nice green candles if and when that comes. If you miss that move for whatever reason, you're not in this stock, and you miss that move, usually have a back test of the highs. That's your buying opportunities. I wouldn't blame anybody, particularly anybody that's not heavily exposed to this name, for wanting to nibble on shares, as again, in the after hours, I'm seeing shares down by about 1.5 points. We'll see how this follows through tomorrow. There'll obviously be a lot of commentary on the financial networks as you move into tomorrow. And we'll be back on Friday to discuss this name here on the main channel. And I'll also join you on the Equity Empire channel this weekend to talk more about this. And I think there's just some more interesting discussion also by the fact that their networking business has not only not grown with the compute business, but it's actually declined year over year. That is mega bullish for the networking names. I mean, astronomically bullish, because they are selling way more compute and basically no new networking equipment. That means the networking stocks are going to benefit dollar for dollar on this one. And that wasn't necessarily priced into a lot of those stocks. I would expect those stocks to be moving over the next, probably the rest of the year. Hopefully you guys enjoyed today's video. We'll be back again with more on Friday and this weekend as well. Good luck with your investments.